Signed a flurry of executive orders on day one involving trade, immigration, energy, and of course, that TikTok ban, which has now been halted, at least the enforcement of it has been halted for the next 75 days. Let's bring in a man who has been inside the Trump cabinet, certainly serving at one of the highest levels also previously, tried to put together an investor group to buy TikTok. He is former U.S. Treasury Secretary Stephen Mnuchin joins us now. Stephen, great to have you. I want to get your take on so many things, but starting with TikTok, because it's kind of one of the last conversations we had on air. What do you see? Is there an opportunity here for you to re-engage, for example? We heard from Bill Ford, from an owner of ByteDance earlier with Andrew. I just want to get your take on the current moment and how you see it in terms of a potential opportunity for you or somebody else to try and do a deal.
Well, first, let me just say it was an exciting day yesterday to see President Trump back in action and all the executive orders that he signed. As it relates to TikTok, I think it was good that he said that he would delay enforcing the law for 75 days to give him time to review it. I've always thought the solution is pretty simple. It involves a group, U.S.-led group, investing more money into the company. I think the existing U.S. investors would want to stay in. And U.S. TikTok is a great business, but the more important part is to cut off the technology from ByteDance and have the technology all transferred and being separate with the U.S. business.
And do you know, one of the key questions has been whether the Chinese government, and you know this obviously, would be willing to allow for any sort of a sale. Do you get any sense, or do you know perhaps whether they have changed their posture, which previously had been that they would not allow for that transaction?
Well, I was encouraged to see some of the signs coming out of China that they were open-minded now that President Trump is in office. I think, again, the opportunity here is just to make sure that the technology is transferred. Bill talked a little bit about the Oracle and the Safe Cloud, but the idea would be to transfer all the technology so that it no longer engages with ByteDance going forward.
Right, which you and I have discussed in the past, though, is not an insignificant undertaking in terms of the lines of code that would have to be redone, the source code. That is not something you think is an impediment to any sort of a transaction?
I think it's something that can get done. It will take time. And the unfortunate part was that ByteDance didn't engage in this while there was time under the law. So it clearly will take time to rebuild the technology. The technology can be rebuilt. The algorithms can stay in China. And I'm hopeful President Trump, who's the consummate deal maker, can get a deal done.
Well, Steve, it's Jim. It's great to have you on the show. Great to talk to you.
Good to see you as well.
Okay, so let's talk about interest rates and spending. I keep hearing from so many guests, because of how much debt we have, because of how much spending we have, interest rates have to shoot up. I know you know rates. I know you know rates from New York Community Bank. I trust your judgment on this. Do rates have to soar under President Trump?
Well, first, let me say, I think on top of the agenda has to be government spending, whether that's done by DOGE or whether that's done, more importantly, within the administration. We had to spend a lot of money in COVID, but since then, the government spending has just gotten out of control, and the size of the deficits. We have to get this back in line to a reasonable level relative to GDP. I'm hopeful that President Trump can pass the tax cuts, which will continue to grow the economy and bring this down. I think 10-year treasuries of about 4.5% are about right. I think you'll see the Fed over time bring short-term rates down to 3.5%. It may take them some time, but I'm less concerned about inflation. But I think given the size of the treasury borrowings, I think the long-term rates are about right where they are.
Well, let's talk about the size. Every time these days we have an issuance, it feels like the 90s when rates really shot up. We didn't have buyers. We couldn't find them. Is there a possibility that we could see, let's say, 6% on a 30-year without a problem?
Unless we have much higher inflation, which I don't expect. I expect that inflation is under control and will come down over time. I think with a positive yield curve, if the Fed can lower short-term rates, which is the expectation over the next year, then I think the market can absorb long-term treasuries. But they do want to see a positive yield curve, and I think that's something we need to see more in the market. So no, I don't expect 10-year treasuries to go over 5%. It would have to change. It would have to be a big change on the Fed, and the Fed shifting back to raising interest rates, which would be a big concern.
Well, Stephen, everything I've just heard tells you that you just got to buy stocks anytime they come down. That's a fabulously bullish scenario you just outlined.
Well, I think it is. I mean, I think clearly you see a completely different economic agenda with the Trump administration. I think 2.0 is going to continue on in a very strong way. We should touch on tariffs a little bit. I know it's the president's favorite topic, but I see U.S. earnings being very bullish over time. Having said that, some of this AI stuff has gotten ahead of itself, and some of those valuations we may see adjustments.
You do? You think so? What do you think about when you say something like that, Stephen?
Well, I just think there's been massive spending on AI, and I think AI is going to be transformational. There's no question it's going to impact everything we do. But I think the economic model for AI to spend, to support this massive CapEx spending that we're seeing is something that is concerning to me. It's going to be a very big use of energy. You see massive construction of U.S. data centers. So there's going to be tremendous demand for additional AI, but I think we're going to have to wait and see what the economic impact is and how people make money on it.
Right. Although there is an opportunity, isn't there, still in data centers and potentially financing them and clipping a coupon, so to speak, as an investor like yourself? I don't know if you're looking at it, but I can't imagine you aren't.
We are. We're very interested in particularly U.S. data centers in good markets that have access to energy, whether it's because of AI or because of the cloud business. That's definitely something that's very interesting.
Let's talk tariffs, since you mentioned it. Are you surprised that Canada seems to be sort of one of the early focuses of the Trump administration?
Well, first let me comment. I was pleased to see the president's EO on trade basically instruct the Commerce Department, Treasury, and the USTR to analyze the trade issues and come back to him with recommendations. I think the China deal has to be on the top of the list, where China has not been following the commitments they made. I think he's going to have to look at whether he wants to put on across-the-board tariffs, as he's talked about, which is a form of a consumption tax on foreign imports. If that money was used to pay down debt, that's one thing. It may be a source of funding for the tax bill. I think as it relates to Mexico and Canada on February 1, I hope that Mexico and Canada come to the negotiating table and do whatever he wants them to do on the immigration issue so that those don't get implemented. I think that would have a very negative impact on many of our economic issues and supply chains, particularly with Mexico.
There are some who seem to be optimistic somehow that nothing has happened in this first 24 hours with regard to China that indicates there's a deal to be done, but I don't. Where are you on that? Do you think that there is a deal to be done with China, or are your expectations more towards that there eventually will be significant tariffs?
Well, I think President Trump has been very strong on saying that he wants to implement tariffs. He wants to use them to raise revenues. He's talked about the External Revenue Service. I mean, in essence, we have an External Revenue Service. Customs and Borders is the one that collects the tariffs, so they could break the group out of that and name it the External Revenue Service. It's not the IRS that does that. He said in his inauguration speech yesterday, again, it can be a great sense of, well, I think the sooner that you can give clarity to the market as to what we expect in the plan, the better off we'll be.
Steve, I know you've always been concerned about social issues and the idea of equality in the country. It's been one of your hallmarks when I've spoken with you. What do you think about what former President Biden talked about in terms of the oligarch society, and whether that is something we should be concerned about as a nation?
Look, I think that President Trump in the first term was very pro-business, and you see this in the second term. And I think it's great that the technology companies are coming to the table and looking to work with the administration in a constructive way. These are some of our greatest assets and some of our most important businesses. And I think it's very good that there's a working relationship with business.
And finally, Stephen, to come back and just end on TikTok if we can. I mean, you pursued it to some extent, and then obviously I assume that effort went on hold. Have you resumed sort of putting together, potentially having the money available should the opportunity arise?
Oh, we only put it on hold because it was clear that China was not willing to negotiate. And now that President Trump is willing to look at a deal, obviously we're going to follow this very closely over the next 75 days. And we'd be very interested in investing in the business. It's a terrific business, and we'd have a technology plan to rebuild the technology.
Right. I mean, you're not alone, obviously. Yet the price tag could be enormous, couldn't it? I mean, again, based on the opportunity there for TikTok US and some of the others as well around the world.
Oh, I think TikTok US is worth a lot of money. It's a great business, and if it's managed correctly, and it can grow into other areas such as e-commerce and expand in the US, it's a terrific business. On the other hand, I think that it does have national security issues. There's no way that China would let any of the U.S. companies operate in this way. Elon commented that X can't operate in China. So I think this is part of, there's got to be a level playing field between the U.S. and China economic relationship.
Yeah. All right. To be continued. And always appreciate you taking time. Thank you. Steve Mnuchin, Steve Mnuchin, former Treasury Secretary of the United States.
Excellent. So bullish. Incredible. He's a market guy. He knows markets well.
Thinks AI, maybe that was interesting. A little aside there.
No, I thought that was interesting.
I mean, again, that is going to be a key question this year that we entertain many times. The hundreds of billions of dollars being spent in capex by our biggest companies, the hyperscalers, and whether they will start to see a return on that, or whether investors will start to push back.
Do you want to be part of the Industrial Revolution, or you want to let it go right in front of your face?
Well, as we were talking, Trudeau on the tape saying the golden age of America is going to require Canadian resources, and he's not against dollar for dollar tariffs.
Dollar for dollar tariffs. Okay, we'll take your. Well, we like their water, their oil,
their lumber. When we come back, CEOs of the world.